The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Welcome, folks. This is Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, we get the Dow Industrials up 46, Nasdaq's down 3, S&Ps are off 7. We have the gold contract up $11. And, folks, we get action. Our phone number is 877-927-6643. Let's go over to the S&P first. So, what do we have out here? Bottom line, you get a failure on price, you get a failure on volume on Friday. You have wide price spread, accelerated volume, all of the above. This morning, they're trying to get it higher. No juice on the upside. The volatility is going to be out here, but what you're going to see, folks, is that you're going to see as we are pounding into this 2107 level, you're going to see some action. I suspect we're going to actually break it. We'll see how this shakes out, but I expect what you're going to see is that this break is going to be before I get off the air. And that break would be at the 2104 level. We hit 210350. Bottom line, that's how that baby is setting up. Now, we go over to the NASDAQ futures. Same setup in the NASDAQ futures. What you have with the futures is this. The NASDAQ futures, you talk about price spread out here today, man. They've had price spread in an extraordinary way. Price spread goes from a price point out here of the 4536 level. You're at the 4506 right now. You've already broken the lows that were established on Friday, and guess what? You broke them with juice, folks, okay? So what does that set up? Guess what? That's going to set up another expansion down under this 4496 area. It's all across the board, and that's quite a start for a Monday, folks. In a new week at the beginning of the month. If you haven't test drove the Nadex platform yet, folks, come over to our website at TFNN. Check out the platform. This is the ultimate for trading the Nadex product. Specifically, if you want to trade something that has defined risk on a continual basis, bottom line, if you're a futures trader, get into the NASDAQ 100. The NASDAQ 100, folks, the spreads are so close. If you're doing a spread, it's tight. And bottom line is that it's defined risk in a huge way. If you are trading that, get into the 80-point spreads. The 80-point spreads, folks, bottom line, you're giving up 1 or 2 ticks. And inside the NASDAQ, 1 or 2 ticks is about a heartbeat. I mean, a heartbeat in an incredible way. We'll go back to those NQs for a second. And what you're going to see inside the NQs is that, right now, we're breaking down right where we were at. Yeah, it's gonna take this apart in a big way. We're at 4,500 right now. That number, the first time down this morning, I think was 96. Yeah, it was 96. This is early in the day. I can tell you this. This is definitely early in the day when you're talking about 10, 11 a.m. early in the day in order to break this baby down. Now, expansion, if you're looking for a price point on the expansion on the way down, this is what you'll be looking for first, okay? When we went topside on Friday, no, on the 27th, the bottom of that number is 4486, okay? So depending on what type of trades you get out there, that's the number you're going to be looking for is the 4486 number. We go take a look at some of the Dow stocks out here. This is what you have inside the Dow stocks. You get American Express down 25 cents. You get Citigroup, that's interesting. Citigroup's up 77. Yeah, Citigroup's up 77. You have Honeywell down 33. Johnson & Johnson is up 11. 3M is down 8. You got Walmart up 34. Some of the high volume stocks that I expect. Now, we're not going to have the high volume that we had on Friday because that was the Russell rebalancing, and that has to do, it puts more volume in the whole market, not just the Russell. Bottom line, we had the volume and it went downtown. What you have out here this morning is that some of these high volume stocks, let's see, we have Altera, that's going to get taken over by Intel, that's up $3. You got GE is down 5. We got Bristol Myers up 2. That's after getting actually smoked last Friday. If we look at the IWM, the Russell 2000, we'll pull the Russell 2000 up. Russell 2000 right now is already have 8 million shares, and that's a monster, by the way. 8 million shares in the half-hour frame, big time, folks. Not in a small way. That is one big number. We go over into the gold. Here, let's go to the dollar first, because the dollar has some dynamite volatility out here also. The volatility inside the dollar right now, you're up 444 ticks. You've done 33,000 contracts. And guess what? You can sell the heck out of the dollar right now, too. This is going to be wild watching this whole thing shake out. In fact, I might go long the euro inside the Nadex platform. We'll see how this shakes out. But this is what you have in the dollar index. So the dollar index right now, here at 97.42. Bottom line, it hasn't even made the swing point. The swing point up there that it has to get into would be the 97.58 area, and it gave it up at 97.43, and right now we're at 97.44. This is going to be wild just watching this whole thing shake out. And our phone number is 877-927-6648. And don't forget, folks, every day we got our man, Mr. John Logan, kicking us off. Larry's going to be doing the 9 o'clock program. And for this week, at least, I'm going to be doing the 10 o'clock program. My man, Mr. Basil Chapman, is going to do in the 11. So when we're talking about trading, we're talking about trades, be there, folks, because this is the time that you don't want to be sleeping. That's right. The bears are pressing. the trading, the expansion with buying and or selling, folks. I'm telling you, it's the bears have woken up, and you could trade probably both ways. But the reality is that the weakness inside this market is absolutely incredible. Our phone number is 877-927-6648. It's breaking apart. It's breaking apart. Let's see what kind of juice we got here. So we're at $1.30 on the NYSE, and it's going to be, you know what's so crazy, man? It's going to, yeah, see this? It's going to be the NASDAQ. They're taking the NASDAQ apart. So check this out, folks. We've done 405 million shares on the NASDAQ in 45 minutes. That's insane. 45 minutes, okay? They're unloading the NASDAQ like, forget it, man. I mean, forget it. If we go over to the IBB, we take a look at the IBB. Bottom line, IBB, that's giving it up too. And the IBB, folks, will take the composite apart, okay? The IBB, there's no doubt, is the highest volatile index that's out there. It has stayed at highs. It's been a bull's dream. There's no doubt about that. The expansion has been tremendous. The expansion on the IBB, you go back 3 years, the IBB was at $83. You're at $361. It hit a high out here 4 months ago of $374. When that gets taken apart, however, that baby can go down 30, 40 points in a heartbeat. And that's a normal deal for the IBB. That's what it comes down to. If we go take a look at some of the equities inside the IBB right now, you got Amgen. That's trading down 68 cents. That's not no big deal. But what you do have inside of that, and they start breaking them down on Friday, it was very subtle. It was a huge expansion of volume as it was going into a swing point. The swing point on Amgen was 155.71. You had 4.3 million shares. We were banging into that with 4.4 on Friday. You're going to see more than that today. So it's pretty intense. Let's go to Victor in New Jersey. Hey, Victor, what's going on?
Hey, something on a side burner. I was thinking, the Fed normally never raises interest rates in an election year. That's coming up pretty soon.
Listen, they might not raise the rates, but the market's going to raise the rates.
Okay, next question. I was wondering, gold, how much it costs to get out of the ground an ounce? And then I'm looking at Molycorp, MCP, and Vail.
How much does it cost for gold to get out of the ground?
Remember you always say it's $11.85 to get out of the ground.
That's
Does that
right.
vary with the dollar and gasoline prices? What is that based on?
That's based on what the actual cost would be, meaning, and it's still right around $11.85, okay? $11.50, $11.85. And what that is this. It's getting it out of the ground, it's getting into the mill, and it's fixing the ground after the fact, okay? That's the number. And that's, when I say that, that's the number, folks. That's an average number going across the mining sector. And so each and every time, well, we've seen it. It comes down to that number. Bottom line is it going to be no more gold? No. And each and every time this thing comes back like a rocket ship, man. So.
Yeah, now check Molycorp. I don't think they're in a lot of business. I don't know. They have a little cash.
No, don't think about this thing, man.
With lighter volume.
You're at 45 cents, okay? Let's take a look at this, where we're at. So you get a buzz. Okay, so the last time it went up to $1.15, and it did take out the little swing point. Okay, so then if you're gonna risk something, risk it at like 34 cents.
And then check out Vail. I know Basil said don't touch it if it goes under 650. So it's under 650 now. What will you do with Vail? Leave that alone too?
No, I'd be buying Vail. I'd buy Vail. It's at 603.
603?
It went topside at 603. Went from 603 up to 914. What that would be is that it's pulling right back into its sign of strength with light volume.
Hey, next question. If the Fed don't raise the rates, because they're controlled by the puppets in the government, wouldn't you still have a rally? You know what I mean?
When you look at it,
you can't really raise it.
No, listen, man. You have a good point. When you're looking at it with the aspect of what we've done, the bulls could turn around and say, hey, you should have a rally because it's free money. Bottom line. Okay, I understand what you're saying there, but the bottom line is that the distribution has been going on for a long period of time. The longer the distribution has gone on, which we have,
it is.
You go south. I think it's going to have to do with, man, the market raising interest rates. That's what it looks like versus the Fed.
What's that called? The money that is out there, they're borrowing. Yeah, I got it. All right,
okay,
thanks.
brother. Have a great one. Have a safe one. You stay right there, folks. We'll come right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Right now, we get the Dow up 6, Nasdaq's down 14, S&Ps are off $1.50. And if we go over and we take a look at these NQs for a second, what you're going to see is that, let's see, NQ M5. When you take a look at this intraday, you're going to see how markets absolutely love, folks, just coming into these high volume swings. Bottom line is that your first leg down inside these NQs got right into that 86 area. We hit 4486, and 4486, folks, was how we took off from on the 27th. Now, what you do is this: as you take the 27th, okay? You take the 27th, and as you take the 27th, you're looking for the correlation inside of that. So the 27th, when we went topside there, we went topside with 19,000 contracts. We just came into it on the way down with 13,000. Okay, so what does that mean? Well, that means that we got to build cause right here in order to break that level. That's how this shakes out. The correlation inside that cause goes like this. You're going to take the way that you came down, meaning on the 13,000 versus on a 10-minute, what type of counter trend bounce that you have going up. Bottom line is that, let's see, we're into it right now in 5 minutes. And in 5 minutes, let me get this a little bit clearer so I can really get into this. Okay, so in 5 minutes, what you have thus far is that we're at 5,400. So realistically, right at this point, and you'll get a better indication even another minute, 2 minutes. It doesn't look like it's going to do it. What it's going to probably do is do another ABC structure on the way down. Because, see, what you do have is this. This is what, okay, so technically you take that setup. Fundamentally, what you do is this, folks, is that if we take a look at the market in general, what you have on a day like today is that because the market opened up and sold so fast, on the opening up aspect of it, you had buying, period, okay? Bottom line is that they got toasted and roasted ASAP. Now, what happens with that is two different things. You won't get the close on that buying until later in the day. So later in the day, yeah, as we're coming into the close, more like you can expect to bounce. What you will get, and that's what we have right now, is that the first couple bounces, you know, when let me pull the E-minis up here for a second. So if we take a look at the E-minis, what you're going to see is that the first couple bounces that you had out here, you know, bottom line, the bulls want to get it higher, couldn't handle it. The bears gave it to them again, they gave it. It's always a fight against the bulls and bears. In this particular case, as when we were talking with Victor, the amount of distribution that has been going on has been dramatic. We are talking, folks, that we are in the exact same spot that we were 6 months ago. Okay? Dow Industrials are at 18,000. The Dow Industrials were trading at 17,900 in December 5th. That's great that you're at the same spot. That's bad that you're at the same spot. Why? Because the money that was put to use through those whole 6 months is still dead money. And the key is that the bulls want a much higher price. The bears, of course, are saying we're going to get lower price. One of the battles that was out there was absolutely and was subtle. When things are subtle, which they were on Friday, that's always a big heads up. And what I've found is this. These rebalancing are important to keep your head wrapped around. The reason being is that most of the time you don't have a huge price spike either way. What you do have, though, is that where is the volume pushing? Because inside that rebalancing, they're moving a lot of things around. Very subtly, what we had on Friday is that you had that downdraft, hardly any price, but a wicked expansion of volume. Now, what we're going to have out here today, which is going to be pretty wild, is that I suspect the way that the volume characteristic is right now, you actually are going to have as much volume in the ETF structures as we did have on Friday. So that, in fact, would be a follow-through to the downward side. We get over. Let's go take a look at a couple of these gold equities. We'll start with Rangel Resources. Rangel out here is trading at a price point of $72.98. We take a look at this on a daily, and what we have out here, there she is. So on a daily basis, we're at $72.98. Now, we're going to need some real juice in Rangel. And Rangel's one, if you're in the gold market, that's going to be a good one to watch, folks. It has to get up and over $73.38. Right now, you're at 73, and it has to do that. It's going to have the volume. Okay, that's what it looks like. We're already at 166,000. It needs like 377, so it's going to have the volume. Now, it's going to get the price. You get into that price today, which is at the 73.38, you're going to have real action. This is Tom O'Brien. This is TFNN. You stay right there, folks. Be coming right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Folks, don't forget at TFNN, we broadcast 10 hours of live programming every trading day, 8 o'clock in the morning to 6 in the evening. Our man, Mr. John Logan, kicks us off at 8 o'clock. We got Larry. I'm going to be right after Larry. Our man, Mr. Basil Chapman. So check it out right on your cell phone, TFNN.mobi. Dow right now is up 5. You get the NASDAQ down 11. S&Ps are off 2.5. Gold's up 10.80. Now, let's go over to the S&Ps, because if we take a look at the S&Ps, yeah, the S&Ps themselves, it's just absolutely amazing that they can actually still be at highs when individually many of these equities that are inside the S&P have got hit, and got hit pretty good. If we take a look at the daily right now and the SPY, what you're going to see is this, is that we're below the lows of Friday. Friday, we came down with 124 million shares. We've done 27 million thus far. That number basically is saying that, guess what? You are actually going to do some decent volume on the way down today. What we have already done is this. On an intraday basis, we broke the lows that were established on Friday. The lows on Friday was at 10:50 a.m. We had 3.7 million shares traded there. We basically got into that out here today, and we got into that with 4.1. So what does that set up? Let me put this on an intraday chart so you can see how this is set up. That setup is saying that, you know what, you can go down. You not only go down, folks, but what you do is that you take the top of that range that you're in. So the top of that range is 212. And then you take the bottom of that range that is breaking. The bottom of that range that we're talking about is 210.82. So it's a $1.20. You can take a $1.20 off of that 210.82, which gives you the, 209.60. So that'll be pretty intense if, in fact, that's what you get. But that's how you basically do fast, down, and dirty day trade price projection. That's kind of how you shake it out. So you're gonna expect this volatility not only to continue, but I suspect it's actually going to get a bit higher. Inside the NDX 100 today, let's go see what's the strength versus the weakness. The weakness inside the NDX 100 is that you have Express Scripts down $2.11. Win is down $2.15. You get Let's see, CA is down 61, and you get Broadcom off 92. Putting strength inside the NDX 100 today is Altera. That's going to be taken over by Intel, and you talk about a paycheck. So check this out, folks. This is pretty intense. These are always intense. Intel's going to buy Altera for $16.7 billion, and the CEO is going to walk away with $40.7 million. How is that? That's pretty intense, there's no doubt. So that's putting strength inside the NDX 100. You have Intuitive Surgical is up $12.78. Intuitive Surgical, that's always a highly volatile stock. That's a dead cat bounce. That had just come down from a price point of $558. Yes, Jude. We're trading at 500 right now. What you always want to wrap your head around too, by the way, is where are the bounces coming from? Baidu.com. Baidu is up 366, and you get Dish Networks up $1.12. Inside the Dow Industrials, we take a look at what's moving the Dow Industrials. Dow right now is up $4. JP Morgan is the mover out here. That's up 51 cents. Big Mac is up 65. You got Goldman Sachs up 137, and Disney's up 63. Taken away from it on the way down, you got Intel down 57, United Health is down 78, American Express is down 50, and you got Costco down 17. There we go. So let's go over and we take a look at Walmart. Walmart, folks, hasn't been able to get out of its way. And this is pretty wild. Our man, Mr. John Logan, was talking about this also a little bit earlier. Walmart is getting really close to a major failure on a monthly basis. Walmart, folks, had taken 12 years to get up and over the $72 and let's see, $70.24. $70.25. It took 12 years. What Walmart has done is that it stayed up there for a long period of time. It's been up there since May of 2012. It decided to go south starting 5 months ago. Now, the real key is going to be, does it get back inside that $70.25? Because if it does, when you do a major failure like that, you don't go back to the consolidation. You go back to the beginning of the move of the consolidation. The beginning of the move of the consolidation with Walmart is $12. So that's going to be absolutely insane watching how this whole thing shakes out. It doesn't mean that it has to go back inside there, but the bottom line, the way that is set up, you know, we'll see, in fact, cannot handle that price. What is intriguing is that, and this is going to be a good heads up for us, as to what Walmart's going to do, because what we do have is that if you take a look at Procter & Gamble, Procter & Gamble right now is trading at $70.40, and it's $75.18. If Procter & Gamble gets back inside that area, that is a major failure in Procter & Gamble. And you have to scratch your head and ask yourself, okay, as my man Logan was saying this morning, if Procter & Gamble's going back inside, if you have Walmart going back inside, I mean, bottom line is that who's taking all their bread? You know, are we just buying electronics and we're not buying food anymore and we're not buying clothing anymore? I don't think so. Bottom line is that what that's saying is that that's major distribution that's happening inside the marketplace. And if you bottom line, if you've been out here for a while, this is a trader's paradise, folks. Okay, you're gonna see this on a continual basis, because once this rocking and rolling starts, and what you're gonna have, this is what you're gonna have too, because we haven't had volatility in years. I mean, there's definitely new traders out there. There's folks out here that got back into the marketplace right at the wrong time again. Okay, and you know, it's like, I don't know how this happens, but you know what? The market's job, as I said many times, is to take the most amount of money away from the most amount of people in the least amount of time, and it's the most efficient mechanism on earth to seem to do that, because each and every time you can make a rebound, the rebound's extraordinary. The downdraft's extraordinary. And what ends up happening, unfortunately, as everyone gets comfortable, what happens? That's, you know, the one thing in the marketplace, you never want to be comfortable. That is what I suspect the market can sense somehow. I mean, and the market is, an alive entity, but the entity itself is all of the fear and greed of everyone that's inside the marketplace. So the numbers, and Larry was talking about this morning, when these numbers start hitting, whether it's the Gottlieb numbers that are hitting, whether it's fib numbers that are hitting, whether it's high volume, lows and highs that are hitting, they basically, once they start hitting, they'll hit 4 months, 5 months, 6 months at a time. Then they lay down again. Bottom line, they start again. But you want to understand those numbers, and you want to trade off those numbers. And just, don't get greedy, but trade off those numbers. What you're going to see is that right now we've built cause for 30 minutes to turn around and try to break the low of 86. And the probability is that you are going to break it. And this is why. Because what we just did, NQM, so watch this. This is how you take your probability down. You take the two 10-minute bars, and if we take a look at those 10-minute bars, this is what you have. We had got down there on 13,000 contracts. The first 10-minute bar off there was 9,000. Last 10-minute bar was 7,000. So bottom line is that, yeah, I think it can spike to 05. You're at 4498 right now. Just have some patience on this, baby, before you sell it off again. But bottom line, that is saying that there's not enough strength, that you're going into the vicious downdraft from this morning, those 2 bars. You're doing it with dramatically lighter volume, and it's just a matter of when does the next sell come down. That's how this whole thing basically shakes out. King dollar. Let's go over to King dollar, because I see the King dollar and the euro move, man. This is, let's see what King dollar has done thus far. So King dollar has got back above DXM5. Okay, so you get 37,000 contracts. You're up 564. You're right. Oh, this is a buy the euro. As soon as we come back, I'm buying the euro. If you haven't been over to the NateX platform yet, folks, get over to that platform. In fact, let me do this right now. 1 second. You gotta love this. I haven't done this. The bottom line, folks, is that it's great doing the show too at 10 o'clock in the morning. Okay, so let me see. Where am I? There I am, right there. Okay. So let's see what we got here. Okay. So as you're looking at this platform, yeah, if you happen to be looking at it, if you haven't traded the platform yet, folks, just get up there and trade with paper money first. 25,000 to put in your account. Then, once you start getting used to how these platforms work and get your head wrapped around the spreads and get your head wrapped around the NDX 100 spreads first, because they're so tight, it's unbelievable. The defined risk is out there. Now, with that said, I'm going to go back into the Forex spreads. And what time is it right now? So it's 10:45. This is going to be pretty cool because the 10 to 12, I suspect what you're going to have is this. If the dollar's going to fall apart, it's going to fall apart right now. So what I'm looking for, the euro's at 109. So 109.05. If I go over to 109.08, that's not bad. I bang a couple of these. And this is what you're always looking for. You're looking for defined risk. So if I bought this right now, I'm risking $76 to make 124, and I bang that baby, and I place that order there. That's good. We got that. Okay, so I'm already in the the NDX 100. That was a score beyond belief. There's, because this morning it was pretty sick how it was coming down. That is only going to give me about, we're at the 4495 level. I'm good to 4480 because that was the defined risk inside that. But now what is going to happen is I'm going to go into that euro, and what I'm looking for the euro, what's so cool here, you're not even looking for a huge move. When you're trading the indices inside it, what you're looking for, what I'm specifically looking for is that, to me, that dollar index as it was going up, that's about the end of the move inside that dollar index, okay? So what I'm looking for now is a turn inside the euro, and I gave up 1 tick. That's it. I gave up 1 tick for the, basically for a defined risk. The euro had just gone from 109.79 and 109.07. Let me put this up here so you can see how this is shaking out. This is like, okay. So you can see what we did here. I'm buying the euro down at the, as far as I'm concerned, at the end of the consolidation. Now, what I did do is this. The euro, I don't have volume in, right? What I do have volume in, however, though, is the dollar index. So I go over to the dollar index. I'm looking at the index, and I'm saying to myself, okay, how are you hitting the top of that? And guess what? We're hitting the top. The last time there was any juice on the way up was 97.43. And we're at 53, and the volume has died in the vine. We went from 3,200 contracts, and guess what? Down to 1,000 contracts. There's no more buyers up here, man. That's it. So what does that mean? All I need is a retracement, 10 ticks inside the dollar index. 10 ticks inside the dollar index are going to basically give me $100, $125 on risk of $76. That's how that thing shook out the other way. 877-927-6648. We're going to take a look at the small caps out here. Now, what's going to be intriguing is this. It's like, okay, what is bringing the small caps down? Because what we do have is this. The small caps also broke the swing point that was established on Friday. It broke it with volume. We did 1.9 million shares versus versus 1.2. Okay, so we broke that. So that's saying it's going to go down. That being said, we know that the commodity stocks are inside the small caps. Well, the golds are up, okay? So the real key there is that, okay, what else is down inside that Russell 2000? That's always kind of hard to figure out until basically later in the day because of the fact there are so many stocks inside that. But that itself is saying that we have some weakness that is laying inside the IWM. We go over and we take a look at the oil contract. Let's go take a look at oil CLN5. Let's see. So oil had a nice day on Friday. CL5. Okay. Ooh, this is interesting. Okay, so the oil contract, ooh, this is pretty. 60.7. Oh, it's not there yet. Okay, so check this out. Don't go short oil yet. So Friday, we get to 60.70. Today, 60.64. The volume's lighter, but guess what? It's going to have to, you want to see that hit at first because that 60.70 has to get tested before you basically hit that shot button. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow's down 9. Nasdaq's up 12. S&Ps are up 2.5. Gold's up 10.80. Silver's up 35 cents. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You get the Dow flat, Nasdaq's off 6, S&Ps are off $1.50. We have gold up 12.20. Let's go over that gold contract. So GCQ5. So intraday, we'll take a look at this baby. Let's see what we got here, because gold's got some nice volatility under it right now. And, you know, it's pretty wild how the volatility inside the gold contract comes out of nowhere. So what do we have? Well, we were at 84 this morning, folks, okay? So we already went up 16 bucks. And what you have is this, is that you pull back on you know, it's pullback for 50 minutes. The pullback characteristic, okay, is about as good as you can get if you happen to be bull in the marketplace, okay? Because the expansion, we went up on 19,000 contracts. 19,000 contracts gets us up to the price point of 1202.90. Now watch this. Watch how we come back. We come back. The first leg back had volume. So the first leg back that took us to 1,200 had 9,600 contracts. Now watch. This is the key. It gets under that, and guess what? You get under that with 2,900 contracts. You get under that with 2,300 contracts. Now what we're doing, what time is it? Okay, it's 55, and this is where the cool part comes in. Now you get an expansion that's happening again. And the GCQ. The expansion that's happening is what? You're at 5 minutes. Yeah, we're 5 minutes into the contract, and we already have 2,000 contracts. So what does that set up? What that sets up, number one, is you're building cause. The cause that you're building here, though, is to get to higher price. And, you know, we'll see whether it can get up and over the 1204 and really blow some minds out here and make a much higher run. What we have, if we take a look at the GLD, is that the GLD has already done 2.4 million shares. The 2.4 million is going into 1.7 million. So we have real strength, folks. When the GLD gapped down, bottom line, it had 1.7 million, and then it had 5.7 million. Bottom line is that you can take either one of those. We're going to do much more than that today. We've already done 2.4 million. The GLD is trading at 115.27. 115.32. You want to see a close above 115.32. The way this is set up at this particular point, though, it looks to me that the GLD is also going to make a run up to higher price. The phenomenal part about this, of course, is what? Is that the dollar index is up 539 and gold is up. So what that says is that if we go back over to the dollar index for a second, you know, where that's why I was just buying the euro, is that what that's saying is that you're going to see this dollar index fail. You know, and we actually already failed. We failed on Friday. We failed on Thursday, actually. But you'll see another failure right now. Right now, the dollar index is at 97.53. What you're probably going to see is if we pull this back, the index is probably going to back down to the 97.43 area. And that doesn't seem like a lot, but guess what? That's enough in the context that you'll have another failure inside the dollar index. The dollar index itself, and this is always a mind blower when it does something like this, did a perfect 0.618 retracement of the full move that had started out there in March. March 13th. March 13th was the high. Comes all the way back down, straight down into the May 15th area. It's been messing around up here at the 0.618, but it basically had hit it on the 27th, and it hit it within the 20th 100ths of one. That's how hit it. And that's really unusual, folks. This is Tom O'Brien. This is TFNN. You stay right there, folks. The man, Mr. Basil Chapman, is going to be coming back. Don't forget, folks, you like TFNN? You like the starting lineup? Tell your friends about it. 8 o'clock tomorrow, John Logan. You stay right there, folks. Basil's going to be coming up, growling and prowling with you. Have a great day. Have a safe day. Look forward to speaking to you a little later today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.